Welcome to a new video on my channel. Hope you're doing fine. Today I want to give you an update about the latest earnings of GENI Sports, which are the second quarter 2022 revenues, and I want to highlight some information out of the press release. First of all, the CEO said that they remain highly focused on delivering profitable growth, and they also have executed ahead of expectations. So this is what Mark Locker said, and he also said that they established a leading position within the US, which definitely is very important in my opinion. They also gave update on the reason for the revenue growth and for the betting technology. The growth has been due to the increased utilization of available content and also organic growth by expansion of value-added services and also new offerings, as well as new customer acquisitions. The growth for the media technology has been predominantly organic growth, and the last part for the sports technology, the growth has been primarily driven by the inclusion of revenues from Second Spectrum. The reason for the better than expected or better than for the last quarter net revenue has been primarily due to a reduction in stock-based compensation, which we will look into later on as well. They also gave an update about their cash position, which I also cover later on. I know some highlights for the Q2, which I want to highlight as well, is the Room and their sports Emmy, which they won, which definitely is really good, and I think it's also really helpful in general, the Room which they have. Some other highlights which I found most interesting is their partnership for the official fantasy game for the 2022 Ice Hockey World Championship, which might also be a revenue and recognition driver, I think. They welcomed a former UK Minister for Sports on their Business Advisory Council, which is also a good sign, since it's always good to have some persons with a lot of experience and also on the regulatory side in your team. To me, it was a bit surprising, but they also gave guidance about 2023, and I will also cover this later on. Now we're in the presentation for the earnings call, and you can see over here just an overview about the new partnerships and also most of the parts which I mentioned before already. So they highlighted different parts which I didn't really go into earlier. So they had free-to-play games for FIFA, MLB and MLS. I think it's also good, and if it's only for the recognition. And the other parts, which you can have a look at it yourself. I think these are the most important parts. They're also giving an update about how they want to improve their EBITDA margin, and the first one is if there's new states which launch, then they get immediate revenue without materially increasing operating expenses. So definitely something which will be taking place in the future with more states regulating online sports betting, and this will definitely improve on one hand the revenue, on the other hand also the bottom line. They also say they profit a lot more from in-play bets in comparison to pre-match bets, so this is more than 3 times higher from the contracted revenue shares in comparison to the pre-match bets. So this is also something to keep an eye on, how fast this revenue is growing, and then what the company has as a take rate. And speaking of take rate, see over here, they also have scope to increase take rates beyond current levels because the official data is so relevant, and this is something which will in the future lead to an increased margin for the company. I already covered this for the growth driver. Now over here, their guidance and what they actually delivered in the quarter. They had headwinds from foreign exchange rates due to the weaker British pound in comparison to the US dollar. However, even with these headwinds, they still had, or they beat from 3 segments, which are the betting technology as well as the media technology. Only on the sports technology, they are a little bit short of the expectation. And as you can see over here, this is due to the exchange rate. However, I think it's 11.3 million, so yeah, not a lot, which is missing to the $12 million. And as you also can see, the group revenue over here is higher than initially expected. Group EBITDA is adjusted EBITDA is in line with expectations. However, given the fact that there's been a headwind due to the foreign exchange rate, I think this is really a good result. They also get an update about their guidance. They reaffirmed current full year guidance to a revenue of 340 million and adjusted EBITDA of 15 million. As they can see over here, under the premise that the exchange rate stays almost flat or is not really changing negatively. As you can see over here, with the initially guided exchange rates, the revenue would have been higher. Something I want to point out is also the cost of revenue, which has been reduced in comparison to the last year and also quarter over quarter, while the revenue has been increasing. So this is definitely a good sign, which then leads to a higher gross profit. And you can see over here, there is a gain on foreign currency, which now lowers the net loss in comparison to the year before. You can see over here as well, the stock-based compensation is around 23.6 million, which is still high. However, in comparison to the revenue, it's 1/3 of revenue, so it's a lot less than comparison Ginkgo Bioworks, which I covered yesterday. And to strengthen the point I was making earlier with the cost of revenue decreasing, as you can see over here, it has been decreasing from the end of Q4 2021, while the revenue has been increasing. Let's jump over to the PowerPoint. So I think the first part's pretty easy. We already covered this. And then let's jump over here to the revenue increase overview and distribution. And as you can see here, it's beginning in Q1 of 2020 to get an overview. And as you can see, it's almost a steady line up for the total revenue in yellow, except it hit a high on the end of Q1 2022 and it's been decreasing now. However, the company already forecasted this decrease in revenue. In blue you see the betting technology revenue, which has been decreasing with a top at the Q4 2021, as well as the media technology and sports technology, which had a top at the Q1 2022. So this will be interesting to see how this pans out in the future. However, I think most important part is to have a revenue growth year over year. However, still prefer it if there is growth quarter over quarter. However, I think this is also due to the highlights of the sports highlights in the different parts of the year. So I think NFL is one of the huge growth drivers. Therefore, if there's no season there, you can't really get a lot of revenue from the NFL in this case. Now let's compare the revenue versus their projections. And over here you see betting revenue is 4 million or almost 1 million higher than expected. Media technology 3 million higher than expected, and sports technology is almost 1 million lower than expected, which leads in total to around 3 million of revenue, which is increased in comparison to the initial projection. Also, let's have a look at the cash and cash equivalent. As you can see right now, they have around 138 million of cash and cash equivalent at their balance sheet right now. However, the company also pointed out that they believe they have a strong cash balance with around 175 million for the fiscal quarter, for the second quarter, for the ending of the second quarter. This is due to the, as you can see over here, restricted cash, which is on the balance sheet as well. And if you added this in to the cash at hand, then you get the 175 million. So, and the company also expect that the closing cash and restricted cash balance will be approximately 150 million at the end of fiscal year 2022. So this will still be enough, and also there's not a lot of cash burn, at least what they project for the future. So this is something to keep an eye on. What I also try to figure out is the shares outstanding and how they develop. As you can see over here, huge increase, or in the rows there is the shares outstanding, and in the green curve you see the growth or the change in general. As you can see over here, from Q1 to Q2 2021 there's been a huge increase, and then afterwards still a jump from Q2 to Q3. However, afterwards the increase has been between 1 and 2%, which is still dilution, however not as significant as for other companies. The same also is true for stock-based compensation. As you can see over here, it's been almost steady from Q3 2021 to Q1 2022, and it's been down 36% from Q2 to Q1 2022. So this is a good sign if the stock-based compensation is reducing, however, while still growing the revenue and also getting the talent they need. So this is definitely a good sign. And as I mentioned before, it's one of the drivers why the net loss has been decreasing. Again, to the guidance, as I mentioned before, they reaffirmed the guidance for 340 million of revenue, despite the foreign exchange risks. And they also gave an update, or gave a general projection for 2023. As you can see over here, revenue between 430 to 440 million and the adjusted EBITDA between 40 and 50 million. So it's pretty early. However, for me, this is a sign that they are pretty sure about their revenue, and maybe I'm too optimistic, but I think this company also thinks that they will even beat these numbers, because otherwise I'm not really sure why you should give a guidance so early. So this is definitely a strong sign in my opinion. So to sum it up, I think the overall revenue were really good. Revenue growth is still intact, at least year over year. However, keep an eye on the margin improvement as well as the revenue growth. These two are definitely important, as well as the development of the gross profit, which is also something really, really interesting to see, and which has been improving lately. Always important is the cash balance. If they can really achieve what they lined out over here with this cash balance of around 150 million at the end, I think this is a good sign. And also something which is for the short term, the foreign exchange rate, which might then also be in the future a tailwind. So something to keep in mind. Yeah, hope you liked the video, and please keep in mind I'm invested in the company and therefore I'm biased. So take it with a grain of salt, and this is no financial advice. This is just my personal private opinion. Hope you feel the same about as me, the company, and would be interesting to hear what you think about the company and their earnings. Yeah, until next time, have a good day. Bye bye.